Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's also December 19th. We got a couple economic news to go over today, so let's get with it. We'll start off with the housing starts for the month of November. So back in October, we had 1.256 million homes. This was actually reduced from approximately about 1.29 million. So forecast for November was supposed to be 1.25, and it came in at a whopping 1.297. So this kind of got offset a little bit with the revision we had for the month of October from 1.29 down to 1.256, and of course now we come up with 1.297. So it's still very good, but again, it got offset a little bit, and the numbers could be a little skewed when you look at improvements when it was again revised lower. Building permits for the month of November, so future obviously construction. So we were on pace in October at 1.316 million homes or permits, and it came in a little bit lower, pulled back a little bit in November at 1.298. These are okay. Again, these are okay numbers, not great, but the big thing about the housing starts, the takeaway from that is this also includes a lot of times multi-units, so rentals and stuff, and this one included actually more of single families. So we saw a bit more single families in the housing starts, which is obviously a good sign because that's kind of what we want to focus on as to getting more families into buying homes here. So let's jump over to the headline news today. Stock market was actually up initially, and it's all, of course, fueled by the tax reform overhaul. We do have a vote in the, I think it's the Senate or the House, that's having their vote today, and then the other one's going to hopefully have their vote today or perhaps tomorrow, and then hopefully have the bill on President Trump's desk by this week before Christmas, and hopefully signed into law. And that's what the investors are kind of looking at, the progression of this tax reform here. But so far they're up, and then suddenly pulled back a bit. A lot of it has to do with some other technicals. I think Apple, some stuff happened with Apple, and Apple kind of pulled, and some of these larger companies are kind of pulling the overall uh, indexes down further here. But the cool thing about this, if you didn't hear about it, this is the first time in history we had the Dow go up 5,000 points in 1 year. Um, Also, we hit another record of 70 new fresh highs in 1 year. Never have we ever done either of those in 1 year. This is generated by so much optimism with the presidency that on Wall Street that this is unprecedented. So it's really kind of cool to see how things are taking off here, and after being such a basically a decade-long slump, that things are kind of moving forward here. So I think a lot of people are kind of happy about seeing that. We've been kind of sleeping lumber for so long that I think we almost kind of forgot that feeling, and I think people are feeling a little bit more rejuvenated as we go forward here. So let's kind of take a look here at the bond market. Bond market, of course, is suffering at the result of that, but it's kind of exchange. We're kind of the opposite of the stock market. So stock market's up, bond market's typically down, and but overall, that's a better sign. Even though interest rates go up as a result of it, but people are doing better and according to the stock market, making more money, hopefully, and such there. So as you can see, we had such a strong resistance, so we've been kind of pushing up against this for last several days here. And then yesterday we kind of broke below the 25-day moving average. Now that's come down, and now we're touching out the floor resistance. We've moved down further. We're down actually from here down to here about 22 basis points. So enough to worsen pricing from yesterday. Uh, we definitely have higher interest rates today. Hopefully this floor can support us, but it's possible it could break below, and I'll show you why. Looking at the 10-year Treasury here, 10-year Treasury has been taken off quite a bit. We broke above this level here yesterday, which puts us on path of possibly breaking, continuous breaking further. So as you can see, we're up about 6 basis points, which brings us up to about 2.44 level here. And basically what that translates is, since we're above this level, we have enough room here to go up to 2.47. And that could further push interest rates even higher as a result of that. So this is kind of where the money is moving from. It's basically right now it's going into 10-year treasuries, moving out of the stocks and moving out of the bonds into the 10-year treasuries. So this kind of gives you a scope of where money's moving so far in today's market here versus the mortgage-backed securities or even stocks right now. All right, so that pretty much wraps it up. Interest rates did rise. Again, just be cautious. We are getting obviously a bullish read or kind of the Santa Claus rally is what they're calling it for a year end. People are feeling pretty optimistic, so enjoy the ride. But meanwhile, if you guys want to get more updates throughout the day, just come over to Twitter. You can find me under my handle Mike Bjork on Twitter, and get the latest updates. Have a great day. Thanks so much for watching. I look forward to seeing you guys tomorrow. Bye bye.